Hey everyone, this is Kirk here again at OptionAlpha.com, and in this video we're going to answer the question, should we use technical analysis for our options trades? So a lot of questions that I get all the time are things like, do you look at technicals before you make a trade? If so, which indicators do you use? If so, should we rely on technical indicators? And what impact does this have on portfolio balancing and beta weighting? So all good questions. Now the answer is that technicals are generally not needed. You do not need to use technical analysis to become a successful options trader. It's much more based on the option probabilities than anything else. The only time that we would use technicals is if we needed a specific directional trade to help rebalance our portfolio, or if we get a signal that comes out of our signals backtesting research and it fits our overall portfolio to go that directional trade. So for example, if we so the first one is if we need a directional trade. If we have a portfolio that is, let's say, bearish in tilt, meaning that our portfolio makes the most amount of money if the market moves lower, well, then we need a directionally bullish trade. So we will use the technical analysis indicators that came out of our signals research and go look for a potentially bullish setup so that we can make a trade. We'll still trade that security or that stock with a high probability of success. We will just make that trade directionally bullish. The same thing is if we actually get a signal, because we have automatic alerts that come to us anyway, if we get a signal that something has been created or some indicator is either going to be rolling over or turning around, then we will ask ourselves first, before we get into a trade like that, if we need another position like this in our portfolio. So if we get a bearish signal or a bullish signal, do we need a bearish or bullish signal in our portfolio, or are we pretty good? Right? So this is some of the things that we always, go over and look at. Now I'll show you guys a quick insight, and obviously I've blurred out the actual indicators that we use because it's in our research and you guys can grab that on our website. But one of the indicators or the sets of indicators that we use all line up. So whatever you end up using, hopefully if you're going to use technicals, you at least do look at our signals research, because we back tested basically like 7 million plus different trades and looked at all the different indicators that are out there. Only 5% actually end up working out really well. But one of the ones that we use, or three sets that we use, is some that give us indicators like this, where when all of these are generally in alignment or in agreement, meaning that are overbought or oversold, etc., you end up getting really good signals to start making trades on. Now, of course, they're not 100% chance of success trades, right? They're still going to be 60, 65% probability of success trades. But you can see when all of these indicators lined up for this recent stock in UNG, we got really good opportunities to make some trades here. And likewise, when all of the indicators were really low and also were flashing buy signals, we got a nice little buy signal. And then again, it works in the top half and in that range as well. So if we get those indicators and those signals, we will definitely make a directional bet. Now, the question becomes, what do you do if you don't have all of those, right? So let's say we're in this time period here where it's not a buy signal, it's not a sell signal, it's just kind of in between. Well, in that case, then you go neutral on the market, right? In that case, you don't make a directional assumption. You assume generally that the market's going to move more or less neutral over time, and that's the way that you end up making that trade. And generally, that neutral assumption has pretty much played out for the last 6 months or so, at least in this stock, and many stocks go through the same type of system or same type of rhythm and cycles where they do have peaks and valleys, but they generally move sideways in neutral within a range bound, which is why options trading ends up working out really well. So again, just to recap here, we don't need technical analysis. You don't need technical analysis, but if you are going to use it, just make sure it fits within the greater context of your overall position. Now, again, you can check out our research report, which is called Signals. It's 20 years of back-tested technical analysis data on basically all of the different major indicators and about 1,400 different variations that we tested. Again, it's inside of the research lab right on our website at Option Alpha.